Palantir's up 324% in the last year and 1,700% in the last 5 years. The stock today is flirting with $184 a share. So, question everyone's asking is, can this run continue, or are we staring at the top? Because right now, Palantir's trading at nearly 800 times earnings. It's true. Yet somehow, Wall Street can't stop buying. Government contracts, they're stacked. Commercial revenue is exploding. And AIP, their AI platform, just turned bootcamps into billion-dollar pipelines. But there is one signal buried in Palantir's numbers that could tell us whether this is the next decade-long compounder or just another overhyped AI rocket that's waiting to flame out. In this video, I'm going to show you exactly what it is and how I'm reading it. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I don't do hype. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. Okay, so if you think Palantir's growth story is unstoppable, or if you're worried about the valuation being a trap, stay with me, because by the end of this video, you're going to see exactly what's driving the stock and what could break it. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Palantir Technologies builds software that connects data, decisions, and operations, so real teams can act faster and with higher degree of confidence. Founded in 2003, today the company is headquartered in Denver, and they're not just another data company. It's the kind of tech that makes governments and global enterprises move like startups. Palantir operates in 2 main lines of business, government and commercial. Palantir helps align software to the needs of mission and industry outcomes. In other words, they sell software that helps people make real-world decisions faster, smarter, and with better data. Their customers rely on any of their 4 main platforms: Gotham for defense and intelligence, Foundry for enterprise operations, Apollo for software delivery across any environment, and AIP to connect governed data to modern AI. Think of Gotham as the battlefield brain, Foundry as the corporate command center, Apollo as the glue holding it all together, and AIP as the engine that's driving the future. At the heart of Palantir is their ontology. This helps unify data, logic, and actions so teams can model processes, test scenarios, and push results into day-to-day workflows. What does this mean in English? Well, it means that Palantir doesn't just show you the data, it helps you act on it. And that's what separates them from every other software company claiming to be AI-powered. Palantir also emphasizes security and granular access controls to privacy and civil liberties. That's a huge selling point when you're dealing with defense, healthcare, or finance, where a single leak could cost billions. Today, the company is led by co-founder and CEO Alex Karp, and they build tech in domains from public health to manufacturing and defense. Their software is used across roughly 90 industries worldwide, helping people do their jobs with the right data at the right moment. So you could say that Palantir's become the quiet infrastructure behind decisions that shape economies, governments, and even conflicts. And that's why investors can't ignore it. All right, so let's dive into the stock price, because here's where things start to get interesting. Today, Palantir stock trades around $184 within a 52-week range of between $40 and $190. And it's sitting right near those all-time highs, which usually means one of 2 things: excitement or danger. Zooming out gives us a bigger picture. The stock's up nearly 144% year to date and about 324% over the last 52 weeks. And over the last 5 years, the stock's been up by nearly 1,700%. So if you were one of the early holders in Palantir, well, that's some pretty big growth. It's exponential. But can the company sustain that kind of momentum? Well, keep watching. Palantir's market cap right now is around $428 billion, putting the company in the spotlight and attracting attention from major funds up and down Wall Street. But when a stock climbs that fast, it doesn't just attract investors, it attracts scrutiny. And that's where things start to get real. So, what's been influencing Palantir's stock price? This is something that's come up on my Discord. And to answer that, we have to look at the story, right? Because that's what's actually pulling the numbers. Stock prices usually follow narratives before they follow the math. And Palantir's narrative is one of the strongest on the market right now. AIP stopped being just for show, and they became the muscle as bootcamps get clients from zero to working use cases quickly, shortening time to value and preventing pilots from stalling. And that's how pipelines convert to production and why customers stick around and spend more. Basically, AIP went from hype to habit. And when companies start relying on your platform every day, that's how recurring revenue explodes. And the proof is in their US commercial engine. Revenue there jumped around 93% year over year last quarter to around $300 million, a surge that says enterprises are standardizing on AIP for real work, not experiments. When customers see workflows land this quickly, follow-on deals tend to get bigger and cleaner. And that's what I call compounding execution. Once adoption hits scale, it starts feeding itself. Also, their defense pipeline remains very sturdy. Big multi-year government work gives Palantir a durable backlog and increases visibility. That's the safety net every tech investor can only dream of. A defense contract can keep the lights on for years. Now, guidance moved up again with full year 2025 revenue now to be around $4.14 billion, and US commercial revenue is expected to top $1.3 billion. That kind of reset signals confidence in the ramp and gives investors a clearer line on what the next few quarters could look like. With their next earnings call scheduled for November 3rd, which is just around the corner, there's no telling what kind of growth we're going to see. I'm going to cover the earnings in my next video, so be sure to watch out for it. And that's where it's going to get exciting, because when guidance keeps rising, expectations rise even faster. That next earnings call could either double the hype or break it. Keep converting boot camps, keep lifting guidance, keep the dual engines balanced. That's how this run looks more like a multi-year climb than a one-and-done pop. So far, it looks like Palantir is doing everything right, but every rocket has a ceiling, and that's where risk enters the picture. So what are some of the risks with the stock right now? Well, a lot of Palantir's money still comes from public agencies, and that can change when budgets are adjusted. We just saw the talk of federal belt tightening rattle the stock earlier this year, and several breakdowns still point to government as a large slice of sales, even as commercial grows. If budget plans get delayed or shifted, deals can slip and growth might stall, which is how a momentum story loses altitude fast. So Palantir's biggest strength, government work, could also be its biggest weakness, and that's the paradox. Their price tag is also a bit lofty. Right now, Palantir stock is trading at nearly 800 times its earnings over the last 12 months. And even with this impressive growth guidance over the next few quarters, it's still trading at 392 times its forward earnings. What does that mean in English? Well, it means that investors are paying $392 for every $1 in Palantir's future earnings. And if Palantir slips even just slightly, that premium is going to collapse fast. Expectations climbed again after management raised their full-year revenue goals and pointed to a bigger U.S. commercial contribution. And a higher bar is great until one big deal slips or guidance turns cautious. And then traders who came for the sprint all of a sudden head for the exits. That's how momentum stalls and valuation does the rest. And I've learned the hard way that when a stock's priced for perfection, it only takes one bad quarter to reset everything. Speaking of headlines, they can bite. And here's a rather important one. Multiple law firms recently announced shareholder investigations this month after reports of concerns tied to a military communications program. Even if nothing comes of it, legal overhangs can sap confidence and put a lid on that multiple. And this is how narrative risk can dent valuation before results ever get a chance to speak. So even rumor of a problem can move the stock faster than fundamentals can correct it. Sharp swings can shake out newer holders and force selling at a terrible time, which is how volatility turns a paper wobble into a real drawdown. Volatility doesn't just test the stock, it tests your conviction. And if you can't stomach swings, Palantir might not be a ride for you. But to be fair, even with those watch items, the core looks solid. The company just posted a $1 billion quarter with rapid growth and higher guidance, while commercial wins are stacking up next to long-standing government contracts. If they can keep execution tight, these risks just look like speed bumps down the road. So the real question isn't if Palantir will stumble, but how fast it recovers when it does. That's what separates traders from long-term investors. Now, we all know that Palantir's last quarter was a blockbuster, which means all eyes are on its third quarter financials set to be released early November. So with all that out of the way, is Palantir stock a buy right now? Well, to answer that, let's see what the analysts have to say. A consensus among 21 analysts rate the stock a hold with a high target price of $215. Palantir stock is the definition of high risk, high reward, given its volatility and the massive speculation that's surrounding it. And with how Wall Street sees it, this can either be your lottery ticket or an expensive life lesson. So the takeaway, don't just chase the chart, understand the story, because that's what's been moving Palantir all along. But what about you? Are you getting in on Palantir's action right now? Are you buying or holding? Or are you just going to be watching them from a watch list? Let me know in the comments below. And while you're there, don't forget to like and subscribe because it'll help others find this video. It supports the channel and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching and I'll see you next time.